Okay, welcome everybody to episode 105 of the Volatility Barometer podcast. Now, the markets are crashing. We can all see that. It's a complete nightmare, seemingly the end of the world. Now, I'm going to try to push through that and actually start getting back into investing subjects. And certainly over the next few weeks, we are going to be talking an awful lot about how we can, hopefully you've done this already, but avoid the damage if this is a major recession. And then also definitely looking for ways that we can try to capitalize through short-term trading methods, through option strategies and whatnot, that we can actually kind of take advantage of this. Because while recessions and market crashes, it's all terrible across the board and people are going to be losing a whole bunch of money. Obviously, for savvy investors, it can also be a pretty great opportunity to make a little bit of profit. So we will definitely be looking for that. But today, just at least for the next 15 minutes until we get to the open Q&A, which probably will be pretty interesting. But for the next 10 or 15 minutes, let me actually introduce the new Volatility ETF. It's actually pretty exciting. It's been a while since we've got one of these. And this one isn't just a regurgitation of all the previous ones. This one actually has a little bit of an interesting methodology behind it. So let me explain the new VYLD, and then of course we'll get to the open Q&A. So as always, hit the like button for me. That's the number one way you can support me. My live streams are always free. Don't send super chats or anything. Just give the live stream a thumbs up. That will really help. And of course, if you're not subscribed, go ahead and do that. Plenty of volatility content, options trading and whatnot. If you like that stuff, you're in the right place. So let's get into the first subject. Okay, the new VYLD, the -1 times short volatility ETP that has just recently launched. This thing is actually really interesting, and we definitely have to dive through this. So, of course, we have a full suite of volatility ETPs on the market already. I've personally been trading them since 2010, so I was basically one of the first people who were aware of them and started applying them to my strategies. And this new one, it's actually been a while since we've seen something cool. So let's actually get into what this all means for us as traders. Really, the most pertinent question here today is, are we going to be able to use this thing in any of our strategies? So what I will be focusing on, of course, this is our total portfolio solution. We trade 4 strategies right now, 25% allocation in each of them. Again, if you're more aggressive than I am, you can go ahead and allocate just half-half to the 2 highest returning strategies. But as far as drawdown reduction, it'll be a little bit better with the total portfolio. And the strategy that we're talking about is the green one, the tactical volatility strategy. This is the one of our 4 that is directly associated to short volatility trading. Now, of course, I get all my signals from the volatility market, so in a sense, you could say they all have a relationship. But the tactical volatility is an absolute direct relationship. Remember, it is a tactical rotation strategy. I'm mining volatility metrics to get those signals of when to move in and out of aggressive positions. So roughly 60% of the time, I'll be in short volatility. My current choice is SVXY. This is a -0.5 times inverse volatility product. Now, I don't want to slow this live stream down, so I'm not going to derail it by explaining why I use the -0.5 times. Got plenty of videos, plenty of live streams explaining all of that. But a key that will come up a little bit later is, of course, roughly 35% of the time, we are actually in an elevated volatility environment and we shift into safety positions. For us, that means gold. And then on roughly 2.5% of trading days, we can actually capitalize if it is a full-on recession. So the question for us is, would the VYLD, this new product, actually be viable? So this is our volatility landscape as it currently sits. These yellow dots, this is the VIX Futures term structure. Front month VIX Future here, then it moves out further in time. And I've organized all of the current landscape into the range on the VIX Futures where they actually trade. So of course, the ones you've probably heard of are all here in the M1, M2. This is the front 2-month range. But remember, there are some midterm futures products as well. But today we'll be discussing over here. Now, the reason this is important, of course, is that it's very vital for investors to understand that volatility ETPs don't actually derive their price based on the supply and demand of the underlying ETP. This is the VXX, the original gangster in the volatility space. This one launched in January 2009. And my point is that this price is not derived because a whole bunch of people are shorting this thing. Now, they might be. It obviously goes down long term. But volatility ETPs, all of them, actually function based on a set methodology. They are essentially to be best viewed as a formula of sorts, and they are tracking underlying indexes. As an example of one of those indexes, this is the one that tracks that VXX that I just showed. This is called the SPVIX STR index. You can see a chart here, 10-year chart, of course it's going down. This is basically the exact same thing as that VXX ETN. You can see the extended right up here, but essentially what it's doing is it's tracking the performance of a rolling 30-day constant maturity VIX future. Now again, I don't want to slow things down here, so if you go to the main YouTube channel, if you go down here, you will notice that there's quite a lot of content about the VIX futures and how it all works. Literally dozens of videos and live streams, but I'll point you to the one that you really do want to start with. It's this one right here. I will leave a link in the description as well as in the comment section of this live stream. Go ahead and start with this video. Now, this is kind of a shameless plug, but don't forget that VTS subscribers do actually have access to our full course library. It's not just about the trade signals day to day. There is actually extended education here. So this is a volatility strategy explained, how to trade iron condors, about 30 videos in there. This one is for VXX and UVXY butterfly trading, stock replacement, you get the point. This one here, the Volatility ETP landscape course, this is going to teach you everything you need to know about how they actually work. And you can see that one video that I highlighted, it's actually lesson 3 here, but there's other lessons here. And if I actually just show you the back end, it's this course right here. We can see that several of these are already published. There's 8 lessons already, so you're going to be quite a volatility expert after you watch those 8 videos. And then, of course, I've got plans for many more. This is just one of several courses we have. So that's a shameless plug, but let's get back into it. The point being that, in fact, the VIX futures are in what we call contango about 84% of trading days. Now, roughly speaking, it's not an exact correlation, but when the VIX futures are in contango, typically speaking, the volatility ETPs like VXX will be going down. But it's actually a little bit more specific than that. So here's what we're looking at that we call the roll yield. It's not actually contango, it's the roll yield that we should be focusing on. Now, what the roll yield is, in this example, here we've got the VIX futures term structure. This is what people would call contango. Contango is when each further out month is higher than the previous month. Now, with respect to volatility ETPs, we don't actually care that this one's higher than this one. What we mostly care about is where these two futures are trading with respect to the VIX index. Because as you will learn when you go through that course that I pointed you to, as the VIX futures are decaying downward, they actually expire and leave the board. And it's that dynamic process that's causing the volatility ETPs to change price. So this situation here, when you've got M2 higher than M1 and both of them higher than the VIX index, this is what we call positive VX30 to VIX roll yield. VX30 being these two, VIX index being here, positive roll yield, a tailwind for short volatility. This is the situation you want to see if you're a short volatility trader. This is a tailwind for SVXY, the one I use, SVIX, which is a -1 times product, and this new VYLD is also a -1 times product. And then we've got the ZVol here. Remember, from the chart I showed before, that's why I've labeled these in green. These are short volatility products. And then when we get to the opposite, which what we call negative roll yield, this is when the M2 will actually be lower than the M1, and both of those will be lower than the VIX index. This is the situation you are going to see when the market is crashing. No surprise, right now today on April 7th, 2025, the market is an absolute bloodbath. So of course, this is the VIX futures, and it's that exact situation. We've got the M2 lower than the M1, and both of them significantly lower than the VIX index. This is what we call negative roll yield, and this is now a tailwind, a benefit for long volatility. So VXX, UVXY, UVIX, and VXZ. So now we get to this new product, this VYLD. Why is this thing so interesting? Like I said, we've had other volatility ETPs launch over time. It's not that uncommon. And you might even go a step further and say this one isn't even that special because it's a -1 times inverse volatility product. It's a short volatility product. We already have the SVIX. We already have a -1 times product. But the difference here is that the VYLD tracks the SPVX STIT index. So remember, I said that they track underlying indexes. The SPVX STR is what the VXX tracks. The SVIX, the -1 times product, it tracks the short vol index. This new one, VYLD, it tracks the SPVX STIT index. Now, I'll highlight this right here. That's the interesting part. The VYLD and this underlying index, if we go down here to the description, we can see the daily index return calculates based on the change in points or units of the VIX futures price rather than the percentage change. This is a radical difference in these products. The SVIX tracks percentage change in the VX30. The new VYLD tracks the point change in the VX30. Now, you might think this is no big deal, but let's get into it. So what we're looking at here, I've got since the launch of the VYLD, March 20th, we've got the VX30 value. This is derived essentially based on the pricing and the average pricing based on the number of days to expiration of the front 2-month VIX futures. So we've got that VX30 value. That's easy to calculate. And here we've got the percentage daily change of the VX30. And then here we've got the SVIX. Remember, SVIX tracks the percent change of the VX30. Doesn't matter how many people buy or sell the SVIX. Remember, there's authorized participants, and they are creating and redeeming shares to keep the price in line with the underlying index. Now, it's not an exact science, as you'll see. For example, VX30 up on March 26th, up 3.37. Well, a short volatility product would have been down, right? And it was down 3.34. So not an exact science. Sometimes it's a little bit off. Over 1 day or 2 days, it can vary a little bit, but of course, long term, it tracks very well. And then again, we can see some really cool examples because we're in the midst of a massive market crash. You can see on April 3rd, the VX30 actually went up 24.81%. This is going to be an absolutely devastating day for the SVIX, which is a short volatility ETP -1 times. You can see up 24.8, down 23.87. Not an exact science. The next day, up 19.33. Next day, or the SVIX, down 20.16. But now let's get to the interesting thing. Here we've got the point change of the VX30, and then the VYLD here. So again, let's pick out a couple of these days. So on this day, the VX30 went down 1.28 points. Not percent, it was actually down a lot more than that percent-wise, 6.57, but point-wise, it was only down 1.28. So the VYLD is going to be the inverse, and it was up 1.12. Pretty close. And then down here, on this day, that devastating day, the VX30 was actually up 4.98 points. That's a very big move for the front-month VIX futures. And the VYLD down 4.52%. Next day, up 485, down 6.07. That's a deviation there. The product is new, and of course, day to day it doesn't track, so it'll probably take a few days for some of this to settle. But you can kind of see what's happening here. On the days where the SVIX itself, a -1 times percentage change ETP, devastating, basically cut in half. The VYLD, not so bad. Pretty good risk management there. If you want to see it visually on a chart, this is what's happened since the VYLD launched. You can see it's weathering the storm very, very well. Now, it would suck to be down 10%, but that's a whole lot better than the roughly 50% that the SVIX is down. So there's no doubt that using the point change is muting the downside here. And so that might lead people to believe, oh, well, this is actually a really good product, right? So who is the VYLD potentially good for? Well, you might think because actually the downside is so well protected, maybe I can just buy and hold this thing. Maybe I can just be a short vol trader and just never exit the position. Because if it's only going to be down 10% when the stock market is literally falling off a cliff, well, then you don't have to actually worry about selling it. Maybe it goes down 25, 30, 40%, but it's never going to go down like the 95 that the other ones will. So let's take a look at that. Well, the problem here, if we're comparing the underlying index, this thing goes back to 2015. So I'm not using the VYLD ETP this time. I'm using the underlying index, which is essentially the same thing. And we will compare this to other things. So we'll compare it to the SVIX. You can see the difference here. Massive difference. The VYLD is super stable because it's tracking those point changes. It doesn't actually move that much day to day. The SVIX, tracking percentage change, if the VIX spikes 50%, the beta of the front 2-month VIX futures is, let's just say, roughly half. The SVIX is going to drop 25%, give or take, if the VIX spikes 50. But that's 50%. The point change in the VIX probably only moved about 5, maybe 10 points. That's why this VYLD is so good managing drawdowns. So great, this is a dream for buy and hold investors, right? Well, not so fast. What if we just compare it to the S&P 500 buy and hold? What happens then? So here, now we're comparing it to the red line, the SPY. And we can see the truth comes to light. I never, ever recommend buy and hold investing for anybody on any underlying instrument. You can make far more money long term if you understand how to rotate to safety positions. This type of investing, we are not active day traders. We're basically just trading 2 or 3 times a month. But just by doing that, you can actually significantly mitigate drawdowns. But having said that, even if you were to buy and hold the S&P 500, it is substantially better than this new VYLD. So even though you could definitely make a case that on a buy and hold basis, it's going to be better than the SVIX, there's no chance somebody can take a 92.5% drawdown and just go to sleep at night and wake up the next day. You cannot buy and hold volatility products. But the VYLD, maybe, probably not, but maybe you could. But you'd still lose to the S&P 500, which you also shouldn't buy and hold. So that's why I say it's just a non-starter. This might seem like a buy and hold investor's dream, but it's completely not. So what about the second situation? What about tactical rotation investors? Like I said, could you stuff this thing into an active strategy and actually come out ahead? Because like I said, for me, I'm only short volatility about 60% of the time. I'm in gold about 33 and then long vol the rest. But this gold position is actually very important for us. So this was a chart I presented just comparing the GLD versus the GLDM within our strategy. So it only goes back to June 2018. But you can see these are just the gold positions within our strategy. This is just when we are holding the safety position. This is when market volatility is elevated. The market is likely going down at this point. We can actually just exit to safety. Why do I care about buy and hold when I can just move into safety and A, mitigate the downside damage of the market, but also maybe even capitalize on it and make a little bit of a profit? So for me, I don't care if this is a good buy and hold vehicle. It's clearly not. But what I do care about is if it can be tactically rotated. So again, same comparison. These are the actual trade signals from our volatility strategy. It is 100% systematic, so I literally can just flip out the ETF and show you the spreadsheet. And this is what it looks like. So for me, remember, I'm using the minus 0.5 times SVXY. I actually really like it. You might think, oh, 0.5 times, it's watered down. Yes, it moves slower than the SVIX, but it also has half the drawdowns. So a lot of the risk management within the strategy is actually taken care of simply because, yes, we do get blindsided occasionally by a sudden market crash, but within a day or two, we can cycle to safety and we can mitigate the damage. So I actually really like the SVXY, but the point being, look at the comparison. Even the minus 0.5 times SVXY is better than the minus 1 times SPVX STIT index / the new VYLD. Now again, this is only on 60% of trading days, so you see the CAGR, it's about 20%. Remember, we have to add more because we do the gold, and we have to add a little more because we do long volatility. So the overall return is higher than this, but this is showing only the short vol positions. 19.69 compared to 13.2. And a drawdown that is larger, of course, because like we said, this does mitigate drawdowns pretty well. But we're looking right here at the crux of the problem with this new ETF. Yes, it's definitely true that it mitigates damage really well, but that also means that the performance in stable markets isn't going to be as high as all of the other volatility ETPs. So if you were to use this thing, I would imagine you would get more consistent results pretty much across the board, just simply based on the structure of how it's built. But the downside, of course, would be that during those 60% or 65% of trading days that things are going really well, the VYLD is just going to significantly underperform. I look at this product and I think it's kind of a shame because they were really onto something here. It's actually, and I'm not going to write it off completely. I'm just saying that it's kind of one of those things that they got really close, but it doesn't quite hit exactly how you would want it to be built. It is a little bit unfortunate, and I know maybe this would have been too complicated or maybe they just don't care. I do believe that this thing will succeed in getting investors into it. But it would have been nice if they could have somehow built in some structure that, say, during the lower percentiles of the VIX, maybe it was tracking at 2 times leverage. You could just do a hard line. Like, say, the median of the VIX is 18.25. Every time the VIX is below 18.25, it's actually a 2 times leverage. And then anytime it's above, it's a 1 times leverage. Now, of course, you still have the problem that there are times when the VIX, say, goes from 40 back down to 20. Maybe then you would also want some leverage. But the point is, there is almost a way to make this thing an exceptional product. It just doesn't quite hit under the current structure. It's not for buy and hold investors because at the end of the day, the S&P 500 by itself outperforms it. And the Vanguard VBank, 60% stocks, 40% bonds, that also slightly outperforms it. So it is a non-starter for buy and hold investors. But it's also, very unfortunately, a non-starter for tactical rotation investors that actually know how to do this. Because the times that you want drawdown mitigation, you're not actually holding the product in the first place. I'm going to be in safety positions. And the times when I want it to perform really well and really track the decline of those front 2-month VIX futures in the roll yield, the times when you get this and it's actually pretty steep, that's when I want my product to be performing well. But that's the exact time that SVXY and SVIX will radically outperform the VYLD. So, damn, right? It's kind of one of those things where it's super interesting, and I'm really appreciative of the fact that there are people out there thinking outside the box and trying to provide really cool stuff for us to play with, but it does actually fall short in both categories. It does actually fall short on a buy and hold perspective, which doesn't apply to us, but for you out there, if you are just, look, I just want to do this and make some money, it's not actually the good vehicle to do that. And for sure, for tactical investors, it just doesn't hit at the right time. Now, I'm not going to write it off completely because, of course, there are ways that we can take the product and actually just use our own structural ranking system for how much leverage and how much we would want to remove at certain times. So fun times ahead. And if you are a tactical investor, feel free to tune into my live streams and open comment section. Feel free to tell me how you are planning to use this product. It is actually still interesting, and I definitely think it'll find a place somewhere in my overall portfolio. But bottom line, sort of spoiler alert at the very end of this, it's not going to be substituted into the tactical volatility strategy. I think that's what obviously the VTS community cares about. But if you're a tactical rotation investor, it's close, but not quite. But we'll keep an eye on it, and should be interesting to play around with the leverage factors here. So hopefully the volume can ramp up. I don't know whether they're planning to do options. I haven't even checked. Maybe they're available already. Maybe they never will be. I don't know yet on that, but super interesting stuff. Put the VYLD on your radar. It is now part of the landscape, and it's a good addition. I will say overall, giving it a score, I'll give it a solid 8 out of 10. It's not quite, but it's something to work with. So now, grab a coffee. We're going to do the open Q&A, and ask me anything you want. The market is melting down. I'm sure it's going to be interesting. So we'll get to the live Q&A in just a second here, but I launched VTS all the way back in January 2012 with 2 main goals. First, to crush the financial industry and help investors start making real progress towards their retirement goals. And secondly, to provide that outperformance at a much lower cost. A low monthly subscription fee scales far better than paying a traditional percentage of assets. Now, our portfolio is currently 4 strategies with low correlation to the stock market and to each other, so it's a completely diversified total portfolio solution. It's also not active day trading, and trust me, anybody from any background can follow VTS in just a few minutes a day. Since retiring from pro golf in 2005, I've been an options and volatility trader for over 20 years now, and I share a lot of invaluable volatility data in every daily email to subscribers. I'm also a certified workaholic, and there's a growing list of courses that all members have full access to. There's a free trial to VTS on my website available to everybody. Come join members from over 70 countries around the world. I can definitely help you achieve your financial goals. Now let's get into the live Q&A. Okay, so hopefully everybody understands how that product works more or less. Like I said, pretty good. Pretty good. I like it. I'm not going to use it just yet, but there might be something there. Now, this should probably be a bottle of whiskey because this is a nightmare. I'm just going to check the market really quick here. We'll do a open Q&A, but market check because it's been an absolutely fascinating day. It was actually down over 5% in the pre-market, and then even at the open, it was flashing incredibly low values. But the S&P right now is down 0.5%. So I would say just general assessment, and it was actually up quite a bit, which was shocking. But I would say that the market is kind of looking like it's trying to justify any reason to rally. So this is the point where, as traders, you want to really start to slow things down. So not to throw out a golf analogy before we even get started here. I was a former golfer, but back when I was playing my best, I used to do a lot of meditations and whatnot and, visualization to try to slow things down. And I used to feel like everything was kind of like my field of view was narrowing very, very specifically. I was attacking my game plan. Sometimes people would watch from the crowd, and after I'd played, they'd say, "Hey, I saw you on 15. I waved to you. You just ignored me." I literally can't see people. Sometimes they say, "You were literally looking right in my eyes and you didn't even acknowledge me." You got to kind of narrow your focus and just stick to what you have your general plan. Because even if this is a major stock market crash, there's going to be absolute face ripping rallies to the top. And even if this is a market that's going to eventually recover, there's going to be plenty of days where it reverses and goes down. And you really don't want to be that trader who is immediately reacting to every little move. You see these, I don't want to be too disparaging, but amateur traders who, it's a bloodbath, everything's going down. The first time you get that big green candle, they just pour in. They think this is it, that's the one, and they pour in. So I would advise people to, double, triple, quadruple check, make sure you stick to your game plan. Don't let the market throw you around. Don't let Twitter make you think that you're missing out on anything. Have your game plan and stick to it, because today is a perfect example. We're going to see this for the next several months. Trust me. We're going to see days where it's totally ugly. You think it's over, sell everything. And then 5 minutes later, the market recovers and you think buy everything. Don't do that. You'll just end up whipsawing yourself and losing a whole bunch of money. So yeah, crazy stuff. Let's get to the Q&A. And again, ask me anything. I've got, off-topic stuff is always fun too. Try to get me canceled. Some people ask about weird stuff. So I will answer everything. I'm an open book. No moderators. Nobody gets blocked. Say what you want. It's an open Q&A. Here we go. All right. So there's quite a few here. I don't know if I should read through all of these. Let me clear that off for you. Would love to hear your thoughts on timing on this. I know your indicators are showing entry point with high confidence levels. Would like to know where there is any bounces in the S&P. Well, of course, like I just said, nobody's really going to know because the signals are going to be all over the place. So you kind of just have to stick to sort of broad generalizations anytime possible. Right now, we're basically have been in safety for a while, so I don't have to make these decisions. But I held UVXY call options last week. Those must have paid off. Sold out Thursday. Should have held through Friday. I don't know if you can say you should have held. The problem with long volatility that you experienced firsthand, wanting to get in, had a 6 times return. Yeah, good job. The problem that you experienced is, as hard as long volatility is to make money on, and it is an incredibly difficult trade, I try to avoid it at all costs because of how difficult it is and how often you get whipsawed. But getting in and making a quick buck isn't actually the hardest part. It's difficult. You got to time it right and you got to hit that market crash. But as you experienced, knowing when to get out is actually even harder, because you can imagine that if you didn't sell out and Trump came out and announced that he's going to put a 90-day delay on the tariffs and we're going to, give our government time to work through all this. The first time around, it does seem like somebody just wrote it down on the back of a napkin and said, this'll do. But this time, maybe they delay it for 90 days. Your UVXY call options go back to where you bought them and you lose it all, right? So you're going to always have that option. But then if you don't hang on and you sell and it actually turns out that this 20% decline turns to 30, 40, and this is the big crash, well, you're going to feel like an idiot because you forego your profits. So I would say to this one, the answer is right there. You made 6 times your money. That's an incredible return. Yes, it could turn into 20 or 30, but it could also turn into nothing. And look, you don't have to swing at every pitch. There's always opportunities on the horizon. So take your 6X and be happy. All right. I want to get into UVXY or VIX or SQQQ for some short-term plays on volatility with the market collapsing. So I would never short the market, just buying shorts on the market. The reason that if you're going to short the market in a, proxy way, it is better to use the volatility ETPs because while it is a directly inverse correlation, you are actually benefiting from the structural nature of the VIX futures term structure. Like I pointed out in my little presentation, when you get into extreme backwardation, or maybe I can just go from here again. When you get into this situation, even if you time it wrong and your VXX or UVXY, it whipsaws back and the market bounces and you lose money, there is still that mathematical headwind that might help you a little bit and it might mitigate your damages. So this is why I always recommend to people, I know everybody defaults to the fast moving, big money, let's roll the dice, VXX and UVXY. I would recommend if you're going to go long volatility to do it with the VXZ because it is a midterm product, right? It is playing over here and it's much safer. So when you get it right, it can still do extremely well. Like the VXZ, it would have been nice if you picked up on it, a couple of days ago. It can still go up a long way. But when it reverses and goes back the other way, it doesn't completely kill you. So I would say avoid, something like the SQs and stick to volatility where you've got that little structural, like just a little bit of margin for error, if you will. What's the last one? Or if the market is likely going to dump here this whole week. Could not. I'm not going to give any answer. My crystal ball is just as broken as yours. So on a technical basis, the market was set to bounce here. Not sure what that means. I don't really get into that kind of thinking, but maybe you're right. It could also just collapse very quickly. Yeah, a whole lot of uncertainty. That's exactly how we all think of this. The title is slightly clickbait-ish. You are bigger than this. Okay, well, I can't remember what I labeled this one. Let me give it a look. Let me see what you're saying. So I labeled it New Short VIX ETF. Is VYLD awesome or garbage? Is that bad? Here's the thing about that. I am with you. I wish, and my personality, kind of boring. I don't do any of the flashy look at me stuff. I don't blast performance all over Twitter, even when I do well. As I always say, I try to keep things baseline. Kind of goes back to my golf career. We used to say that you should be able to look at a player on the golf course and have no idea how they're playing. If they're playing well or they're playing poorly, you should have no idea. They might be playing the best round of their life and they're just emotionless, and they could be, shooting 10 over par and they're not smashing clubs and, breaking rakes in the bunkers and whatnot. So I just try to keep everything sort of baseline. I don't brag when I do well, and I don't make excuses when I do bad. I wish that was the case on social media, but unfortunately, if you don't play the game a little bit, you get run over. Then you end up with a situation where you get all of these charlatans piling into the industry that know nothing, and they will mislead you. But because they're really good at social media, like they have no idea how to invest, but they're good at social media, they're good at clickbait, they're good at titles and thumbnails. Those are the people that get 300,000 followers, and then you follow them. But what you've forgotten is they're not investors. They have no experience trading. They're social media guys. They're good at computers. They're good at graphic design. They're good at those types of things. Well, I've seen plenty of YouTubers who have 10 times the followers that I do, that I guarantee you they have no history of trading before they launch their business. None at all. They're just, young people who are exceptionally good at social media. So while I agree with you that if I am guilty of clickbait, I am bigger than that. I'd like to think I am, but you might see in the coming year or two that I might capitulate and just start playing the game a little bit, because at the end of the day, this is, I'm confident in my work. I've got a very long, almost 2-decade track record. I think people are better off maybe not listening to me directly. I don't give direct advice, but getting guidance from my work. I do work not 24/7, but I'm a workaholic. And I think you're better off taking advice from the good guys out there. So I hope that the actual good investors start also getting good at social media. So at least you're seeing the feeds and the YouTube channels of the right people, not just, young kids who don't know how to trade but kick ass on YouTube. I don't follow them. So yeah, I unfortunately, I apologize, but I do have to play the game a little bit. All right, I am a VTS subscriber. Volatility trading strategies. Why are you trading discretionarily, not following your trading signals? So, I knew this was coming, so let's just address the elephant in the room. Last Thursday, we've been in safety positions pretty much since February 21st. So we've been doing sort of fine-ish. We've skipped most of this trouble. But our tactical volatility strategy, where it says cash here, this should say VXZ. And last Thursday, this dial was just a less than 1 decimal point sliver away from going long volatility. So essentially last Thursday, we missed the signal here. And so last Friday, I decided, given that the VIX had gone from 20 to 40, and we just missed it by a hair, it probably wasn't a good idea to go long volatility through the weekend after the VIX has already doubled. It was one of those extremely rare, it's only happened a handful of times in the last 13 years since I launched VTS, that I made a discretionary decision. Instead of doing the long vol and walking into it, I decided to go to cash. So let's just check. I mean, this could fluctuate the rest of the day, but 0.95. And then the other day, I think it was up about 5%. So that decision cost that strategy about 6%. That's what it cost so far. All I can say is I am a systematic, rules-based trader. I don't think it's the end of the world to be 99% discretionary and 1% of the time just allow yourself to look at the market and just say, this just doesn't look like a good risk-reward ratio. Because of course we could have gotten Black Monday, and we damn near did. It was looking really ugly for a while there. But we could have also got an unbelievable rally if there was any good news over the weekend. And so I just made a call. I've done similar things like for Brexit, for example. I completely sidestepped Brexit, even though one of my strategies did have me in short volatility. I decided to go to cash overnight, and it turned out that that was one of the most devastating days for short vol traders, top 5 worst days ever. And I avoided it, right? I moved to cash. I just thought, you know what? This is such a massive binary event. If it goes well, yeah, of course I'm going to regret not being short vol. I might lose a few percent. But if it goes badly, I could lose 15 or 20. And that risk reward ratio I felt was skewed. Same with last Friday. I just thought that, yeah, long vol could do better, could do well the 3rd day in a row. But the risk reward is you could get hammered the other way. So I just made a call. And now I'm kind of stuck in that limbo middle ground where, when do you get back in? Okay, I broke my signals Friday. Didn't cost me that much, but it cost me a little. Now what, right? So now I have a lot of thinking to do. I'm going to go on a 20-kilometer run tomorrow, and I'm going to think about, what am I going to do here? Am I just going to be happy that, we're in cash. The SVIX is down like crazy. The market's down crazy, and there's nothing wrong with being in cash during that whole period. And that strategy was in gold for most of it, so it's actually up money, but it could have been up 6% more. So point taken. I will never be able to say that I'm 100% systematic in those strategies. It's more like 99. All right. Looking for a signal when to short VXX when we get these historical spikes. Yeah. Probably the number one thing people are looking for, to be perfectly honest, because all you really have to do is flash a chart of the VXX and people are like, oh, I see the game here. Obviously, this is going to go down eventually, and all I really have to do is wait for it to go up and then short it, and I'm going to make a whole bunch of money. You could be completely forgiven for thinking that that's a good strategy. And I'm not going to tell you it's not. I'm just saying it's not what I do. I always wait for confirmation of signals, and I, as best I can, try to be systematic about it. And while it's true that there's a very good likelihood the VXX will start going down again, this is also the most risky time because the VIX going that high that fast, if we stayed in backwardation for a long period of time, which we very well could, the VXX could easily double or triple from here. So it is a risk reward bet. You would be playing the contrarian because right now volatility is in the 99th percentile. Shorting volatility when it's in the 99th percentile is as risky as it gets. That is as risky as going long volatility when it's in the lower percentiles. You just have to get the timing right. Otherwise, you're just going to bleed capital forever on that position, waiting for the market crash. And when it finally eventually crashes like it's supposed to, you're probably down so much money, the market crash has to be the end of the world just to get back to break even. That's what happens when you try to contrarian long vol when it's low. It's the same thing when it's high. Sure, you could short it here, but you'll be paying fees. It's an unlimited loss trade. It could double or triple from here. And then what? So investing is not always about just making money. It's about allocating your capital to the things that make the most money. Think about it more as an opportunity cost. You got $25,000 and you could use it to short VXX here. Or you could use it to do literally anything else with that $25,000. So it's not a matter of analyzing whether shorting VXX will make you money. Probably if you wait long enough, it's an almost near certainty it will. Question you need to ask yourself is the capital better allocated elsewhere? And I would say yes, for sure. In my opinion, for sure. Shorting VXX is not number one trade right now. It's not the worst thing in the world. The thing goes down long term. It'll probably get back there. It could stay there for 4 years. So it's not the best way to allocate capital. I always look for the best risk reward ratio, not just absolute return. Did it make money? Did it not? Who cares about that? All right, hopefully that made sense. That's a tough one to kind of communicate to people, but they're like, "What did you just say? You're not trying to make money when you trade?" No, I'm trying to make money, but of course there's thousands of stocks, there's thousands of strategies. You have to choose the best one, not just any one that makes money. All right. Does it make sense to sell VXX calls? Nope. I'll stop you right there. Given the market condition, the premium is super high. VXX is at 76, and April 17th, 150 call has a 1% premium. So again, this is a tough thing to communicate to people, but you have to take my word for it. The option market is relatively efficient, quite efficient. And that's especially true if you're talking about volatility trading and options trading. You're not competing against dummies. You're competing against people who actually know the environment. A lot of them are institutions and hedge funds and people who really know their stuff. So don't assume that you know something that they don't. And I don't mean you. I mean, I do the same thing. I have to remind myself that I'm not the smartest person in every room. There are other people trading volatility-related instruments that are just as smart. They have just as much data. They have just as much history. So when you say things like, the premium is super high, that some people will think the premium's really high, it's time to sell. What you should be thinking is the premium is super high because there's a high likelihood that it gets there. Otherwise, that premium wouldn't be high. You said that the 150 call is a 1% premium. If there was no chance that it was going to get to the 150, that would be a 1 penny contract because it's an efficient market. So the reason that it's paying so much is because there's so much risk involved. Always look at it from that perspective, and you might not walk into things. But more than that, I hope you know how layered shorting VIX calls, naked calls on VXX, UVXY, UVIX, all this stuff, VIX, all of it is very, very inefficient. So how many people are here? I know some of you have seen this, but maybe a couple of you haven't. I think this clip's only like 40 seconds, but here we go. This one's for I don't ever short the volatility ETPs directly. A lot of people mistakenly think that the biggest problem with naked options is the risk. And yeah, sure, it's a massive problem, and a lot of people out there end up blowing up their account when they use them. But another risk people often overlook is just the opportunity cost of using an option structure that is so capital inefficient. You're tying up massive amounts of money to just try to make small profits. The old picking up pennies in front of the steamroller analogy. With naked straddles, naked calls, for example, even if you don't blow up your account, you'll still make way less profit long term than some of the other defined risk strategies. Yeah, there you go. So obviously, when somebody says, should I short calls, the immediate thing we talk about is the risk. But like I talked about the previous question, risk is only scratching the surface of why selling naked options is bad. It's also just unbelievably capital inefficient. So you would find that selling one naked call, what did you define it as? The 417,150, I think you said? You would find that one single contract, if you were to open, say, a broken wing butterfly, defined risk down at sort of your target range, you could probably open dozens of contracts for the same amount of capital and still be on the hook for less risk if it goes against you. So there is always better ways. I don't want to be that guy that always just says, oh, if you do this, you'll blow up your account. Because if you know what you're doing, you probably won't. It's not about blowing up your account. It's about using your capital efficiently. And there is nothing more inefficient, especially during the market crash. So you got to remember that brokers are going to also crank up the margin requirements. So that's an insanely high capital inefficient trade. I wouldn't do it. There's just way better ways to allocate capital. Not saying don't short or take a short bias, but do it in the most capital efficient way. Defined risk, always. Okay. Any point in, there's no off-topic questions at all, so I don't have to embarrass myself. Any point in buying any volatility stocks like VXX and UVIX now or wait? I think I've banged this one to death. Oh, no, I haven't. I misread that. Sorry, sometimes I skim through the questions, so you're going long. Is there any point? Well, I can tell you for a fact that my signals are still showing we're in the 99th percentile of volatility, right? I mean, this is pretty much as high as it gets. This is our volatility barometer. You can see the levels. It doesn't touch 90 very often. We're talking about European debt crisis, fall apocalypse, Q4 2018, pandemic, of course. We are at the highest of the high levels. So if there is a time to go long volatility, it is now. It is red across the board. So you do have a green light to go long volatility. I would again say VXZ is the one you should be using. VXX and UVIX, crazy if you get it wrong. You could lose a lot of money very quickly if you get it wrong. Volatility is like a coiled spring, right? It can work in both directions. When it's way, way too low, like in 2017 or something, bad things can happen if the market goes down 4%. But it's also the other way. If the VIX is already gone from 18 to 60, that thing can deflate and you can get volatility crush that just destroys your trade. So the VXX is by far the best of both worlds. It will still make a good rate of return if you call it, but it's just not going to whipsaw you that badly. So again, I can't tell you what to do, but I would put those off the table and just use VXZ, which is an ETN, or VIXM, which is an ETF, if you don't mind all the K1 and tax filings and whatnot. All right. What time is it? Can I just check the time? 48 minutes. Not bad. I guess to add to Potato's question, even if he gets assigned short VXX at 80, I think he said 150, didn't he? But or is that not Potato? Where's our friend Potato? Yeah. He said the 150 call. Now you're saying if he gets assigned at 80, eventually it'll make money. VXX will go down eventually, so as long as you can hang on and your margin allows. So again, technically you're not wrong, and I don't disagree that eventually all the long volatility products, we know where they're going. They're going to zero, reverse split, go to zero, reverse split, go to zero. We know this, right? The split adjusted price of UVIX is like $15 trillion or something, and now it's, whatever it is. So we know that this is going to happen. The questions are quite layered. What happens if it triples in the meantime? Well, now all of a sudden, presumably, the rest of your portfolio would also be in trouble. I mean, I don't imagine you're straight up short the market on balance, like if you calculated your delta exposure right now. So yeah, VXX, what if it triples from here and the rest of your portfolio also goes down another 20%? Well, now all of a sudden you're talking about margin calls, right? So no, it's just, why would you allocate your money this way? Why wouldn't you just do a defined risk trade and open up 10 times as many contracts of an iron condor, a butterfly, some type of vertical spread? Lots of things you could do, calendars, diagonals, you do ratio spreads. There's tons of things you can do that will get the same result. It'll be the same net exposure of the market, but just in a much smarter way. So VYLD, I checked, the options are not listed yet. I don't know if they will soon. Sounds like going to work. Leaps. So you're going to basically do a wheel strategy where you're getting into it and then you're going to sell calls against it. Sure. It's just, I think that's going to come down to a capital efficiency question. I think there's better ways to do that. I think there's better ways to allocate capital. FYI, the swing today in the SPY was due to a social media post that got something wrong. That's how wacky the market is. A bonkers social media post swung the market by trillions. If you think about it, that is the craziest thing ever, that is what happens because of social media now. That quite literally, because I saw the same thing where the market was looking very close to circuit breakers at one point. And then somebody on social media, there's a lot of, charlatan type people out there in the last couple of days. And somebody just said, oh, the president has announced that they're doing a 90-day delay in the tariffs. And like you're saying, what, $5 trillion changed hands because of a social media post? We're in trouble, folks. Like I said at the very beginning, it is more important now than ever to stick to your plan. Do not let social media push you around. Don't let the market force you into positions you were not going to take, and you're only going to take it because you went on Twitter and you saw a post and you got butterflies, and then you looked at the market. Oh my God, he's right. It is up. This is it. Pour back in. And now, for all we know, 2 days from now, it's 10% lower. So don't let anything push you around. You have your plan. Execute it as emotionless as you can. Like I said, you're on the golf course and no one can tell whether you're 10 under par or 10 over par. That's the way you got to trade. What will happen if we get vol crush in the coming few days? What will happen is stocks will go up, VIX will drop to 30 or something in the 20s really quickly, and the volatility ETPs, the long end ones, will absolutely crater. That's what's going to happen. I don't know whether it will. I tend to think that what's going on right now is a little more structurally serious than social media posts. So I think even if something does come out and the market has vol crush in the next 2 days, I still don't think that's time to just sign the all clear. I think some very serious global damage has been done. But I covered that to death in last week's. Last Friday, if you want to see me uncharacteristically emotional about policy decisions. I'm not a macro guy. I basically don't take it into account for my trading. All data, quant numbers, volatility metrics. But King Donald, your words, not mine, he's done some incredible damage to the markets. Just as a side note, I've watched the response speeches from at least a half a dozen world leaders, and they're not playing around. They specifically say, calmly, by the way, well spoken, that the world that we were used to, certainly for the last 70 years, but let's just say in the last 10 years, the world is over. That is done. The world is going to be moving to other things. They have been forced. It's it. That's it. The damage is done. Whatever the market does, and I actually think that most people out there are taking the market too seriously. Like, honestly, it sucks when the stock market crashes. Obviously, a lot of people get hurt, but That's not the problem here. Like, the stock market could be at all-time highs in 2 months. That doesn't mean that this was a good policy. Even if the stock market gets to all-time highs again, and of course the Trump administration will be claiming victory, that's not a victory. The defeat is done already. It's a wrap. Like, the other countries are going to be quietly looking for other trading partners. That in itself is not a good thing. The United States has spent 100 years trying to have the rest of the world basically under their boot. And because of the power of the economy and the power of the military and all of the global outreach with, foreign aid and trading deals, they've managed to do that. And the United States is incredibly prosperous. It is just such a self-inflicted wound to take your global dominance and throw it away. Why would you do that? The United States was in such a great position. Everybody wants to trade with the U.S. Everybody wants to be partners with the U.S. What happens if you take off that facade and world leaders look around and they think, shit, we've been trying to negotiate with the U.S. across an ocean for 50 years. Why don't we just negotiate with that country that's literally right there next to us? And, they are seemingly a much more easy trade partner to deal with. It's one of those things where it's, until you make people see it and until you make world leaders see it, it didn't happen. But now that you've forced them to look at the situation, a lot of them are going, oh, we did make some mistakes the last 20 years. We shouldn't have re-upped those trade deals 10 years ago. We should have stayed tough and we should have looked for other options. That's what's happened here. The market matters, obviously, but it'll go up, it'll go down, the market will recover. All-time highs are in the future. Whether that's 3 months from now or 3 years from now, the market will reach all-time highs. The United States global dominance will never again reach this top of the mountain. It's done. Obviously, this is all my opinion, but that was a grave mistake. And I'm a super big fan of the U.S., as if you watched my live stream last Friday. That's what I'm looking at. So markets aside, the damage is done. And it sucks. King Donald Al Maktoum bin Trump, I'll read it. I wouldn't word it that way, but says inflation is gone. Tomorrow the king will say the earth is flat and I will bend my reality. There are some people that are just doing unbelievable mental gymnastics to justify this stuff. And I don't mean to be too condescending, but the vast majority of the very few people who agree with this policy, and make no mistake, I'm not a liberal. There are plenty of conservatives who are wildly against this policy. The very few people who actually agree with this policy, there's a couple of glaringly obvious things they have in common. Number one, they are unbelievably rich, and none of this matters to them. And number two, most of them are really old, and they won't be around to suffer the consequences. So your country's being run by people who don't understand even the most rudimentary economics, and people who are so stinking rich that none of this matters anyway. It is kind of a game. And I've been very vocal that I said, Trump was better than Harris, and if I was an American, I would have voted for Trump. But Trump himself kind of thinks it's a game, proven by the fact that he was literally golfing while all this happened. Like, I just don't think he understands the gravity of the situation. And he doesn't have to, because him and his entire circle of billionaire cabinet members are 100% protected by all of this. And that's one of the problems that I have with it. If you're, I'm going on a crazy rant here. If you're one of these people that actually are just going to stand by your president, that's fine. I'm not telling you have to agree with me. You can think I'm dead wrong and Trump is absolutely 100% right and this is the best for America. But what I want people to try to consider is just ask yourself, are you sure your incentives align with your leaders? Because when you look out at all these people that are telling you this is the greatest 4D chess move you've ever seen, none of them send their kids to the same school that you send your kids to. All of them send their kids to the most expensive private schools available. None of them, you're never going to go to the grocery store and bump into them. Oh, wow, I went to Starbucks. Look, there's Tucker Carlson. That's never going to happen. They're in gated communities with 24/7 security. Their lives are nothing like yours and mine. I went to public school. I'm just a regular guy. I hang out at the local Starbucks. I don't have, I live in regular communities. I don't have kids, but if I did, they'd go to public school. Our lives are nothing like the leaders that you're listening to. Just make sure you know that, because again, I'm not telling you have to disagree with what Trump's saying. I'm just saying that all of them have different lives. If you are a Republican voter, you have way more in common with your fellow Democratic voters than you ever will with the elites that are running your country. And that's just the bottom line. Red and blue in the middle class and below, you guys are 90% aligned because you guys send your kids to the same school. You guys work in the same industries. You guys live in the same neighborhoods. You might have certain disagreements about social issues, but your lives and my life is nothing like Elon Musk's life. So do I really want people who are so out of touch with reality that they think the word grocery is a novel concept? I was at the grocery store an hour ago. I can tell you exactly how much bread costs. I can tell you how many eggs are in my fridge right now. I'm just a regular guy being run by people who haven't bought an egg in 60 years. Like they're born in... Anyway, rant over. I did it all last Friday. If you want to hear me rant, go tune into that one. But I am fuming here. This is... breathe. This should be whiskey. I am not happy with what is going on in the world around us. Okay. I'm holding April 25th 45 strike puts on the VIX. Is this a mistake? So what you want to do, this is an older video, an oldie goodie, they would say in my day. I'm old, I know. But if you go to the YouTube video, you can also just use the search function. But there's something here about buying VIX puts is stupid. Where am I? It's probably clickbait. Like I said, I try to play the game a little bit. Oh, man. Don't you hate when I do this on every single live stream? I say there's a video and then I can't find the video. VIX puts. There we go. Here's why VIX put options don't work. Watch that video, and then you can kind of decide whether being in those puts is a good idea or not. So I'm not telling you that those puts won't pay money. They might. I'm not telling you that the VIX won't go below 45. It will, and probably pretty soon. The problem with buying long Vega, long volatility options on their own as a standalone, it means you've paid a fortune for those put options. And what is going to end up happening, and you're going to see it with your trade, is that as the VIX starts to go down, your trade will not be making nearly as much money as you think it will. There's actually situations where you could be in where if the VIX is 60 and you buy 45 put VIX options and it goes back down to 30, you can still lose money because you paid so much money for that contract that you still can't overcome that Vega headwind. That's what ends up happening. So what I always tell people in a crisis, the first thing you need to always do is make sure that your options are low Vega or negative or short ball positions. Make sure they have a put and a call built into it. Iron condors, verticals, calendars, butterflies, all of those things that we talk about all the time on my live streams. Make sure at the very least it's one of those, because at least then you're not just walking face first into a massive Vega headwind. Then from there, you have to structure it correctly. You've got to make sure that it's at the right strikes. You got to make sure you're position sizing. But right from the jump, you have to make sure you're not super long Vega when volatility is at 60. It's not a good position to be in. So again, not telling you it won't make money. Good luck. I really, really hope it does. But you might find that your profit bleeds down very, very slowly, or goes up very, very slowly. Okay. Shorting VXX puts is far safer than shorting calls. It is. I love shorting VXX puts for the same reason that the vast majority of people out there presumably have a net long equities, net short vol portfolio most of the time, if not all of the time. So the more strategies you can put into your portfolio that are inverse correlation, the better off you're going to be. So yes, I would definitely say people need to experiment with this. Now, when the VIX touches 60, is it a good time to short the VXX puts? I don't know. You'd have to go really, really, really far out of the money. Let's just check that right now. Let's see. If I was somewhat suicidal and I wanted to do a 10-day short VXX trade and it's at 73, I would probably need 73 cents to even tempt myself to do this. So we're talking about the 52, 53 strike, somewhere around there. So let's say the 53 strike on VXX 10 days from now. That's what I would be looking at. So the 53 puts you right about here, basically where it was 3 days ago. And that's going to pay you about 1%, return on capital for a 10-day trade. I typically target somewhere around 1%, sometimes 2% if I trade at the money. But so right there, is that safe? Well, I'd be more comfortable down at 48. Like, it's one of the things that you can often look at is because the damage is done, and psychologically, even if there's massive volatility crush, it's going to be a little sticky. So it's not going to get back down to the same spot. It won't get back down to here very quickly, but it could get back down to here. And that's kind of the range that you're talking about. So I'd be more comfortable somewhere sort of halfway between the recent blow-off point and the most recent low. So if the 51.50 strike, somewhere around there, paid me enough, I wouldn't mind going for 45 cents and just taking a little less. It's a 10-day trade. So yeah, I would say doing that. Now, the thing is, of course, people are going to say, well, you'll never make any money doing that. That's 0.7% return. Yeah, for a 10-day trade. But if you do 30 of them a year, and let's say 25 of them make money, 5 of them lose money, the covered calls make you more. So when you get assigned, you can actually dump the shares for an aggressive premium and you can make more. So actually, year long, you can still make a decent chunk of money, even though you're not going to make a whole bunch of money in the next 2 weeks. That's not how it's structured. But the good thing is literally zero upside volatility risk. So yeah, I would say that's just universally true. And it's even more true considering most people are net long the market. Okay. When executing a PBWB, put broken wing butterfly, right? On VXX, are we at risk of assignment? Well, with all of option trading, anything that is in the money is at risk of assignment. So, of course, you have to close your position before expiration day. If you're asking for like early assignment risk, it's lower because I've been trading, I don't even know how long I've been trading options on volatility-related products, and then the VIX before that. The number of times I've been early assigned, it really only ever happens when you're trading stocks that pay dividends or stock indexes that are paying a dividend. But I honestly cannot remember if I've ever been early assigned on volatility ETFs. That's just not how people use them. So I think you're fine if you mean early. Now don't do something where it's just going to end up to be so far in the money that, yeah, it might happen. But I'm guessing you're going to lead it out of the money quite a bit. And so even if it gets there, it'll only be in the money a little bit and probably only for the last couple of days. I think you're going to be just fine. He's deranged. Me or Trump? Probably both of us. But I will say in my defense, it's him that made me deranged. So I guess I win. Thank you for the information. Love your content. Yeah, appreciate it, everybody. I don't know how many people are here, but smash the like button for me. Do you suspect your portfolio will have to evolve to account for international markets? Maybe. So I will tell you, just a little spoiler alert, that I am already in the process of trying to find a few replacements for the strategic tail risk strategy. This one here, tactical volatility, has basically remained, I would say, materially identical since we launched in 2012. This was one of the original strategies in my portfolio, and it has not changed. And that's the same with defensive. No changes, materially the same. But this is the one that I'm allowing myself to play around with. So you probably have noticed over the years, if you've been with VTS a while, over the last, say, 7 years, 8 years, we've switched out the safety position multiple times. It's been bonds, it's been cash, it's been real estate. It's been all kinds of things. And, this is supposed to say VIXM, so it's long volatility. But I will allow myself to play around with this. So if you think about it, SPY, I could switch that to some type of international stock if I wanted. IYR, I don't think in this current environment, maybe not real estate isn't the best. So maybe I'd be looking to switch that out soon too. I do like long vol here, but I do also like dynamic products. Like, for example, there's the one called Chaos, right? This is a pretty good one. Doesn't go up as much as long volatility, but it's pretty good. There's also Tail. That's another one that I might just consider using somewhere in my portfolio. But when you're talking about emerging markets, the reason that they've never appeared in my strategies is just the unbelievably high correlation to the stock market. So there's not a whole lot of point trading them unless I have a real reason that something has fundamentally changed. And the individual ones are the same. Like if you look at individual German stock market, French, whatever, the UK, they're pretty ugly. And the United States has been for quite some time the cleanest dirty shirt in the closet. And it just is that way. Now, whether this is the final step that switches that, I suspect there's some truth to that. But I wouldn't know which country to go to just yet. We have to see how all this shakes out. I think that most countries around the world, like 98% of them, there's 170 countries, 195 countries, 170-ish that were tariffed. Probably all but 10 of them are going to just do what Trump says. I just want to see what happens over the next few months about the few countries that either partially play ball or perhaps with China, maybe they don't at all. Maybe they just don't at all. I posted this on Twitter today that, China has caved to the U.S. demands for decades. They have to. Are you sure that's still true? I live in Asia, so I'm a little bit biased here, but are people sure that's true? Like, Donald Trump seems to have an economic policy that is straight out of 1975. So are we sure that he has actually looked at the modern numbers? He does seem to be thinking that, I think his advisors were saying it today, that quite literally they imagine a scenario where the minutia U.S. manufacturing of like assembling shirts and shoes is coming back to the U.S. Like, they're not joking. They have really actually fundamentally miscalculated the globe. Like, this is not a joke. 1975's calling. They want their economic policy back. That ship is long sailed. And the thing about China is they have such long-term plans, and they have a political system with no resistance to anything. So I don't know, China in 2025 might just say, finally, we don't have to do this anymore. Finally, like the Chinese reliance of U.S. exports is down to about 15% now, right? The Chinese exports to the U.S. account for about 15% of their customers. I would imagine if they wanted to, 2 weeks from now, they could replace half of that. 2 months from now, probably 2/3 or more. 2 years from now, 0. That China would actually be fine if there was zero trade with the U.S. They wouldn't be fine now. It would suck for a few weeks, and for a few months they'd be scrambling around. But it's not 1975. They really can just find customers. It's a whole lot easier to find customers for your products, especially when they're good and getting better every year, quality-wise, and cheap. It's way easier to find customers for those products than to build them yourself from scratch. That takes 20 years. Finding new customers, how long does that take? Like, honestly, a good world leader that other countries are starting to say, hey, this guy's kind of reasonable. He's, negotiating with him might actually work out. How hard is it to replace that? So decoupling from the U.S. economy has been happening for 20 years, and I think it's decoupled enough where they can kind of give the finger to the U.S. And as somebody who's super pro-U.S., and I'm Canadian, and you guys are our buddies, and I don't want you to drop the ball here, I'm super pro-U.S., I am just afraid that China is finally in a position where they can just say, okay, We will subject our citizens to 2 years of unbelievable pain. But 2 years from now, the U.S. is cooked. They might just do that. I don't know. This might just be old man yelling at clouds, and you guys are like, this guy's taking it way too seriously. But I really think this was an epic blunder that will be studied throughout history for a very, very long time. Anyway, back to the trading. Trump thinks he will force China to capitulate, but he doesn't know how China operates. Agreed. They have plans set for the next 50 years. You read my mind. Only self-sovereignty country on the planet. That is why U.S. is pissed off. Yeah. I don't know what the solution was because China's rising anyway, right? They have slowly and surely just, the old, oh, China makes garbage products. I would never ride on a Chinese high-speed rail. I would never drive my car over a Chinese-made bridge. That was probably true 30 years ago, but I'm not so sure it's true anymore. They got cars that jump. They've got flying taxis already in. You can go right now to cities like Shenzhen and you can just take flying cars. You just get in and fly your car. It's working now. I don't think people understand how fast China's evolving. And they probably also don't know how fast other countries like Singapore, other countries where I'm like right now today, I'm sitting in Dubai. Do you have any idea what they've achieved in 20 years? I look outside my window, that was desert for miles. And now it's one of the most impressive city skylines you will ever see in your life. Amazing things can happen when you have no political resistance and you're willing to put your own citizens through pain. Incredible leaps forward can happen. And you might say, well, that's not fair. The Chinese people live in poverty and the government's communist and they don't have an opposition party. All true. But you have to trade the stock market you have, not the one you want. The reality is China has an unbelievably huge advantage because they don't have to pass through Congress. They don't have to deal with being voted out and primaried, and they don't have to deal with losing the midterm elections. Guys, I want you to win. I'm trying to help you win, but you're making it very difficult. USA needs to bring manufacturing back to survive. Partially agree with this. I have no problem with targeted tariffs. Tariffs are a good tool to protect certain industries. So if the United States wanted to negotiate some high-level deal with Taiwan over chips and try to somehow protect the semiconductor industry and kind of lock it down for the next several years, that I would support. Because of course you don't want to go into a economic battle or literally a military battle with a country who produces your goods. Obviously, that's not a good idea. But there are many, many ways to bring back certain strategic, important industries in the U.S. through global cooperation and global trade. That's the whole point here. Nobody is saying that Trump's wrong to want to not have American airplanes being made in China. That's not a good idea if you're going to go to war with China. But pretty much everybody with even a modicum of economic background knows that the way he's going about this is way wrong. We know that for sure. I'm not in disagreement about the fact that U.S. manufacturing has dwindled a little too far. Everybody knows that, right? The United States, living like kings off of this trade negotiation and just the dwindling manufacturing, that's great if there's never going to be a war again. That's awesome if there's never going to be economic conflict again. But it's just not wise to have your most strategic industries offshore. But what would be wrong with doing it in Mexico? I don't think Mexico is going to side with China if there's a war. Like, Mexico's right there. They're not going to risk any of that. Just what you need is a really tight regional alliance. You don't piss off your two best trading partners at a time where you need them the most. It's just, we agree on the overarching problem that there's too much offshore manufacturing and not enough domestic. We all agree. We wildly disagree on how to achieve that goal. And that's when you need leaders who actually understand how the chess pieces move around. Trump might be a good golfer. but I promise you he knows nothing about economics. And I hope he's not in charge, because I've never really thought that the president themselves, like I don't think George Bush was even invited to the economic meetings. I don't think Obama really had any input in what's going on. He's got 15 advisors that just tell him what to do, and he just like, oh, okay, sure. What does the president know? Trump's the first president in a very long time I look at and I think he might actually be running the country. Like he might actually be in the room making decisions, which is alarming because he can't have 17 expertise. I know he says he's good at everything, like literally everything, but he's only good at 3 things. And that's why you need advisors to tell you about all the other stuff, right? So, but Trump might actually be making decisions, which is alarming. Like Biden was weekend at Bernie's, like did dead man walking. He was, I'm going to get banned on YouTube for that. There's no possible way that they asked Joe Biden what we're having for dinner, let alone what we're going to do with economic policy. No chance. But with Trump, this does sound like Trump 1980 talking on, CNN. You're 40 years outdated, my friend. It's time to let the grown-ups take over. So go golfing. Love it. The president's job should be to command strength, to do great speeches, and to bolster patriotism. That's the president's job. The president's job is not to negotiate trade deals that he knows nothing about. That's not the president's job. So I hope they do just send Trump golfing and, not to be too disparaging, but, Trump can go sit at the kids' table and eat the mac and cheese, and the grown-ups can actually eat the turkey and make the decisions. So I hope that's what's going on. Scotch or Tennessee? I don't know what Tennessee means. I don't drink Scotch. I was just joking. I'm a wine drinker. So you got me there. I use QLD as skew indicator for my local market. My market tends to lag 1 week. 1 week. It's probably faster than that. I do notice that the Qs are super correlated to global markets, probably daily. So yeah, good call. You need signals to trade your domestic markets as well. And since the US is the biggest powerhouse in the world, you of course want to develop, you want to look at those signals even if you're trading a international market. Okay, I remember you saying not great things about MSTR and what its CEO is doing, but the other day you showed your wheel of fun with MSTR. Don't you worry about a massive crash? No, I don't. I think MSTR is a trading vehicle. I do believe that Michael Saylor is pulling the wool over a lot of people's eyes as far as, I just think he's a fantastic marketer. And it's kind of the same thing I said with YouTube. When you're following investors on YouTube, the vast majority of the really popular, really famous ones aren't actually traders. They just watched a bunch of YouTube videos and they're really good at regurgitating the same kind of message with better thumbnails and titles, and they're really good at that, but they're not actually traders. Michael Saylor, he's very rich, so I'm not going to say, oh, he's unsuccessful. You can't say that. He's got the money in the bank to prove. But I think how he does it is 99.9% marketing and 0.1% substance. So the way that he talks about his strategy, he tries to make it sound like it's risk-free. It's anything but. And even if he thought it was risk-free, don't assume people are stupid. That's a big mistake. Don't assume that other people who have money are dumb. Don't assume that the bondholders don't actually know what they're looking at. Don't assume that just because Michael Saylor said it's risk-free, that everybody involved with it is risk. No, the plug can be pulled at certain levels. So yeah, I think it's a big mistake doing what he's doing. But as long as Bitcoin holds up reasonably well, he's going to be just fine. And of course, he is steadily pulling money out of it. So it's like I said before, even if it goes belly up, I mean, this guy's way too rich and way too old and to care what happens to the regular people. He just doesn't care. He lives in a massive palatial castle somewhere with 24-hour security. Okay. And a lot of these rich people, even in America, a lot of them are finding second homes around the world. Like, I've been talking about digital nomad lifestyle for a long time. And believe me, I track the statistics and the numbers. You'd be surprised how many of these people, those same people that are making US policy, have for the last 5 or 10 years slowly been finding second residencies in tax-free countries. All of these people, these podcasters that you watch that are pumping Trump, all that stuff, they're 5 years from now, they're going to be the first ones out the door to move next door to me in Dubai. Like, they're just going to make their money and leave to some island. And then they're just going to leave the US to do what the US does. So again, don't assume that you're in the same boat as these people. We're not. We actually have to be mindful of where this is all going. They have the pick of whatever they want. So Michael Saylor, he's going to get his no matter what. I just feel like, Bitcoin's days are numbered. And I've always said, not tomorrow. I mean, 4 or 5 years from now, I'd be very interested to see the price. I'd say lower than today for sure. But yeah, I trade MSTR. I don't put too much at risk. And I think it's awesome premiums and it's fun. So that's why I do it. You don't have to, when you're option trading, you don't actually have to do fundamental analysis on the underlying. You just have to, I have a 10% stop loss on that strategy. Wheel of Fun, if it's down 10% at any moment in time along the short puts to the holding the shares to the covered calls, 10% total value stop loss, pull the plug. And I stick to it. So I can trade anything that gives me premium. All right, I guess the U.S. will miss the exports of Chinese harvested organs. Okay, I don't know if I got to be careful nodding, laughing, agreeing with certain things because I don't want to get pulled into things I didn't say. There is a lot of anti-Chinese sentiment, and I know exactly where it comes from. And in most cases, it's totally warranted. China has been an interesting place the last, obviously, thousands of years, but even in the last 20 or 30 years. There's no doubt they steal intellectual property and they rip it off and it's illegal and they do all these things. But again, does that matter? Like, if they win, does it matter? If Trump does illegal things too, I'm not saying Biden didn't, I'm not saying Obama didn't, but Trump does illegal things all the time. But if you get away with it, is it illegal? No. So that's what China's doing. They're basically playing the same game. Yeah, we'll rip off your intellectual property. Sure. We'll take your patents from you. We'll build the stuff. And 20 years ago, it wasn't built very well. Now, you'd be shocked how advanced China is. I mean, it's unbelievable what they're achieving. I hate to say it, and I'll say it disparaging my own country so people in America don't get mad at me. China is way further advanced than Canada is. It's not even close. Canada can't even build a national railway. Canada can't even build basic bridges. We haven't filled a pothole in 20 years, and there are countries like Dubai, like Singapore, like China, whole cities popped up, and we can't even fix a broken school sign. You know, it's just, you guys are not you guys, but some Americans are stuck in a little time warp where they still think it's the 1990s. It's not. Go there. Do yourself a favor before you shit on all over China and, you know, they're terrible and all that. Get on a plane, go to Shenzhen, China, take a look around, go back to Phoenix, Arizona, and you let me know if I was wrong. So there's just less than 5% of Americans have ever been to Asia. So they just don't know. That all they see is what Fox News says or CNN or MSNBC. It's just not true. They've advanced a lot. And I'm not saying I'm going to move there. I'm never going to live in China, trust me. But that doesn't mean I'm not terrified of my enemy. Is there a box equivalent in Canada where I wouldn't have currency exposure? I don't think so, but maybe. I don't know. As you know, I think I've talked about this a lot, but I don't worry about currency exposure anyway. It's just, that's adding an additional layer that I just don't want to get involved with. Everything I do is US dollars. All my accounts are US dollars. All my bank accounts, I still have bank accounts in the US. I'm not a resident. I don't live there, but yeah, I'm US all the way. So I don't worry about that. I wouldn't want to take that into account. I haven't done my research to say enough about it yet, but I just know that there's several dynamic funds that are supposed to, at least in the marketing material, they are claiming, right, that that they're supposed to mitigate risks. So what I'm going to have to do, just for example, if we go over here, like a lot of these things that I'm tracking, some of these ETFs are apparently designed to mitigate damage in a crisis. So DBMF, for example, if you look at the marketing material, they'll say it's really awesome, but then you look at it and does it really? Like it doesn't really mitigate risk at the time that you would want it. Some of these things do. So Chaos does pretty well. This one, KMLM, I'm sure if you read the marketing material, they would talk about how they've got, hedging and all this stuff. And it sounds really great, but do I really want that? But then, like I showed, there are a couple of these, like Chaos or Tail, that at least glancing at it, it does look like it's doing what it's supposed to be doing. So, the one that I've actually done a video on it, the MSVX. Hopefully this loads. Is my internet out? But some of these things just don't do anything like they're supposed to do. So it is just pure marketing drivel. But I would definitely need some time to dive into that. They're interesting, right? I mean, I have two strategies that trade long volatility. It'd be great if one of them used a dynamic fund and one of them used long vol. I think that's, it's time. They haven't failed or anything. It's just time. Maybe update a little bit, have spread it out a bit. Besant is a Soros piggy. Not sure about that. Nothing surprising that. I think the thing about this, though, is you have to understand that rich people rub shoulders for decades. So, I mean, they work in the same industries. Sometimes they work in the same companies. But there's overlap with all of this. As I always try to reinforce the idea that your average everyday Republican and Democratic voter just getting off work after a shift have way more in common to just go to the bar and have a beer, and you'd enjoy each other's company. It's not like you have to argue about abortion if you go to the bar and have a beer. We're all in the same boat here. We're just arguing about little extremes here and there. And yeah, there's like 10% of the left that I couldn't possibly hang out with. It's just like, what are you talking about, right? I'm a former professional athlete. I've been an athlete my whole life. I've competed in like 5 different sports, and sometimes with women. I cannot get behind a society that thinks it's okay for men to go into the women's sport just because they say so. I am on the side of women and women in sports and them getting scholarships. And could you imagine being the parent of a female athlete who lost their scholarship because some guy just said that he's a woman? So there's 5 or 10% of the left that I wouldn't hang out with. There's probably 5% of the right that I wouldn't hang out with. But 90% of the rest of us in the middle, we can go golfing, we can have a good time, we can disagree on things, and we can go to the next hole and we're not going to get into a fight. We can all be friends. But the leaders, they're all on the same team. They're on rich guy team. So even if they're voting red and blue, promise you they're friends. Like Nancy Pelosi and Mitch McConnell are best buddies. I promise you. They're just puppet masters playing the game, It's rich versus poor. It's not red versus blue. It's not black versus white. It's haves versus have-nots, and that's the game. So a lot of these people, yeah, you could find overlap all over the place in these circles because that's the way it works. At the end of the day, I mean, for all we know, they're having phone conversations with each other this week. I mean, it's rich people get richer, and they're going to win. They've been honing this skill of transferring wealth from the poor to the rich for 50 years. You think we're going to beat them? Not unless we align and form a cohesive argument against them. But as long as we're bickering amongst ourselves for the little scraps that they kick down, this is never going to get fixed. It's too bad. It's just, they're very good at convincing us that we are enemies when actually it was them the whole time. And it always has been for thousands of years. Go through history, like pick up a history book. It's been the same story written with different words through thousands of years. This is the game. So don't let them ruin your future so that they can have a slightly bigger mansion. It's just not a good idea. That, of course, begs the question, who would you vote for? Because I'm not saying Kamala would have been any better, but I don't know. We're all screwed. It's every man for himself. Maybe living in 2018 when he signed the USMCA and is living in 1980 again, as his age it happens. Yeah, he does make comments that are kind of funny sometimes, like, who the hell negotiated these terrible trade deals? Pretty sure that was you, but that was 5 years ago, I guess, so it doesn't count. I'm going to stop watching all financial YouTube. Yeah, I wouldn't say all, but you certainly have to curate your feed, and you have to be super vigilant on trying to determine whether the people that you're watching, their incentives align with yours, their life should be fairly close to yours. I think this is another issue that a lot of young men struggle with these days, why they definitely want to get ahead, but they spin their wheels. And it's because you get your average 20-year-old who has a basic education or maybe no education, not a whole lot of money. And who do they follow for advice? They follow Andrew Tate, who has 35 supercars. They follow Alex Hormozy, who has a $100 million business. They follow all these people that are just a million miles above them. That's not helpful. What you want to do is you want to follow people that are fairly similar to your situation, but just a little bit further ahead than you. And if you do that, then yes, now we can start to align. And if you view your politics the same way, then you can start to find the good people, right? If you start doing that, don't take your political advice from the people at the very top. Take your political advice for the people that are fighting their way up to the top. All of those fairly no-name-ish politicians out there that are still kind of idealistic, those are the ones that you want to be looking at, not the ones that are already sitting in the castle. Their incentives are long gone from ours. You want to kind of, so when you're parsing through your social media feeds, you want to make sure that you're not listening to people who are 30 steps ahead of you. Listen to people who it's pretty obvious they're still in the trenches. They're still trading. It still matters. Like when you watch me, I can tell you I'm not rich. It matters if I lose money this week. I do not make more money on my subscription business than I will lose if I make this mistake. So it is actually very important that I make money. Most of the financial YouTube people, most of the podcasters, most of these people, it doesn't matter. Like, who cares? Like, you're taking advice from, pick your guy, Tim Pool, on the markets. Tim Pool makes 100 times more money having you watch his show than he ever does on the markets. Why would you follow somebody like that? You got to follow people who are actually in the game and not just super awesome at social media. So I wouldn't say ditch it completely, but yeah, give it some thought. Who are you watching? Are you sure you get the vibe that they are actually doing what they're telling you they're doing? Or are they just really awesome at getting you to click the video? Because our brains, algorithms, they control us. And I have not figured out how to do that, right? I only have 31,000 subscribers on YouTube. Not to toot my own horn too much, but I think my videos are very helpful and I'm proud of them and they're pretty good. But yeah, people just don't watch me. I don't play the game well. I'm old and I don't understand algorithms and social media, and I'm a one-man show and I don't have any help. I don't have a programmer. I don't have a social media manager. I'm just me. Yeah. So you can watch me. Delete everybody except me. How about that? Self-serving. Aside from chips and high-level machining, China, it's at par at USA and Germany. Well, it won't take long. Again, this is sounding like I'm on the China team, like I'm on the go China. I'm really not. I'm just assessing the landscape. China will beat the whole world at whatever they choose to beat them at, because they'll make a 10-year plan and they'll keep their head down until they achieve the plan. Whereas every other country has to go through 15 levels of government to even pass a basic bill. So yeah, again, this is not an advertisement for the benefits of communism, but there is certainly benefits to their system that there's downsides too. There's inefficiencies all over the place in that country. It's crazy when you look into it. But I think the benefits outweigh the cost. And I think people focus on the cost. They're like, oh, there's whole cities, ghost cities. They're wasting all their money. China's bankrupt. No, they're not. They're really not. They factor those wasteful things into their economy. It's like Japan. People have been calling for the inevitable decline of Japan. Just go there. Just get on a plane and go to Japan. And I dare you to say it's not your favorite country on the planet. It just works differently over there. And the only way you'll know that is to go there. If you listen to the Western media, it's a bankrupt country with nothing but 85-year-olds living there. Okay, go to Tokyo and you let me know how bankrupt Japan is. So, just one of those things. I am very, very fortunate that I made the decision 35 years ago that I was going to be a global citizen. I was going to live around the world. And I've experienced all these places firsthand. They're all different. They all have their flaws, but none of them are as bad as your media says. And pay attention. Yeah. All right. Tax the very rich. This is an interesting one. This gets into a very touchy subject because this is crazy. This shows when people have fully drank the Kool-Aid. Because if you really think about it, when we say tax the rich, we live in a progressive tax system. So nobody is saying we're going to take all their money. The only thing people are saying when you say tax the rich is we should honor the progressive tax system that we have. That's all people are, or at least that's all I'm saying. When the tax brackets go up to 40%, that doesn't mean they're taking 40% of your income. That just means that money above whatever the tax bracket is, it gets charged at progressively more. And so there is always a benefit in a progressive tax system to keep making more money. This idea that rich people are just going to choose to not be rich anymore because they want to avoid taxes is lunacy. Of course, that's not the case. So you could either do a flat tax, no loopholes, no exceptions, none whatsoever. Everyone pays 20%. You'd probably want a hurdle rate at like $30,000 or something. Nobody should be broke in the U.S. Richest country in the world. There shouldn't be a single homeless person in the U.S. It's an embarrassment that you guys don't even have universal health care. But yeah, I'm not saying like claw all their money away. I'm just saying two things. You should probably put an end or tax wealth, right? Death taxes, basically. You don't want a society where people are basically able to take advantage of the system the whole time and at the very end just give it to the next generation that can start at the same spot. It's not a good thing. But at some point, the United States is going to have to get past their knee-jerk reaction to listen to the very people who are rich tell you why you shouldn't tax the rich. I promise you, Patrick Bet-David could do an hour-long expose on why it's terrible to tax the rich. I wonder why. All of these people you listen to that say taxing the rich is a terrible idea, are any of them not rich? It's really self-serving. Like I'm sure Candace Owens would be appalled if you said we should increase taxes on the rich. She probably makes $20 million a year. She probably, there's a little bit of a self-serving thing there. But yeah, you've just got this basic problem, and it's not even a tax the rich problem. It is a compound interest problem. Essentially, I look at it as just a math equation. If you've got one person who basically lives paycheck to paycheck, or maybe they save $500 or $1,000 a month, and you give them a 30-year runway. Some of them who can't even save any money, they're screwed anyway because they spend all their money on their budget. But even if you save $1,000 a month, you're just compounding a little bit. But because rich people have such a vast amount of their money compounding, maybe they're not making any more money, but just give it some runway, and eventually you go to a situation where the rich own everything. It's not because I'm calling the rich sleazy. I'm not calling them they're stealing from us. It's not. It's just a math equation. It goes like this. It's parabolic. It's compound interest. Their money is in the markets and in real estate because they spend a tiny fraction of their money on their monthly budget. And everybody else who's below the 70 or 80 percentile in the US, they don't get benefit of tax or compound interest. So over time, rich get richer, poor get poorer. Next generation, wealth passes on, rich get richer, poor get poorer. This is just a math equation. It's emotionless. I have no problem with rich people. I'm not against them at all. I'm just saying, just run the numbers. Give it 20 more years, the wealth gap is going to be staggeringly high. Give it 40 years, it's going to be, forget about it. The movie Elysium, where they all go to the moon and they just leave everybody else on Earth for the scraps, that's not that far away, just simply because of the parabolic nature of compound interest. So yeah, we're screwed. If you don't have the bulk of your money in inflation-adjusted assets, guess what happens? You simply time out. That's what happens. So yeah, tax the rich. Have to. You have to. And find a way to do it well. Don't just say, okay, we're just going to steal your money. No. Find a way to make sure that it's still beneficial, that the marginal gain of making an additional dollar is still worth it for them. You don't want to stifle the rich, but at the same time, you've got to solve the fundamental problem here. The problem is that, and most people are here, like 60% of Americans now are living paycheck to paycheck. They're not compounding anything. They're just getting timed out. They're just kind of waiting and just getting surpassed by doing nothing. So yeah, solve the problem. When you have your 10% stop loss on Wheel of Fun, is that manual or is it automated? Manual always. Easy for me to say. I'm on my computer literally all day long. So if you've got a job or something like that, you can set automatic stops on everything that you do, even complex conditional orders. You can do that. But for me, everything is manual because A, you should do limit orders with options, never market orders. You'll kind of get screwed on the bid ask, and especially if it's a multi-leg option, don't do market orders with an iron condor or something. But yeah, manual always. I just watch it, calculate it in a spreadsheet. If it's time to pull the plug, if I've lost 10%, I'm out, look for a new target. So if that MSTR position screws me and I lose more than 10%, all right, maybe I'll move on to Apple or something like that, you know, but manual, always. How many more questions? I'm sure we could do this all night. Like, as you can tell, I have no problem speaking my mind, but you're probably like, oh my God, he's circling back to the same subject like 4 different times. This thing which I appreciated about China is China succeeded and left West, nothing against West, behind when the entire world was against them. You need to have strong will to do that. Yeah, there's just a lot of structural advantages to being basically isolated and not subject to caring about the, you know, they basically probably decided to just fade off into the background for several decades. And they literally have the ability to do that. They have 100-year plans. But I think now, I think really now in the next year or two, certainly 5 years, we're going to see them pop their head up with ferocity. And it's just going to, all these people that think I'm crazy, that China is still some backwards third world country, there's going to be a moment 3 or 4 years from now when it just slaps them in the face and they realize, oh, everything I thought China was wrong. Wow. They really are an advanced nation. They really are a threat to our way of life. They really are going to win this war. I think there's going to be just a moment of brutal realization from the West, from Canada as well, from Germany as well, from France as well. Shit, we gave away the game, didn't we? And by then, it's probably too late because just, again, compounding exponential nature of simple math equations. China is outpacing you, especially, I mean, just basic stuff like energy. Who's creating more energy? The US or China? China's like 3 times as fast solving their energy problem than the US is. It's not because they're better. It's probably because every 4 years the government in the US changes hands and you got to start all over again. You got to go back to square one. Well, now Biden has to do this, and then Biden's going to be stifled for 4 years, and then let's give Trump a chance. But if he loses the midterm elections, he doesn't get another chance anymore. So then 2028 comes. Let's hope we get somebody else. And then if we lose the 2030 midterms, we're screwed and we're a lame duck. China's just exponential growth. No resistance. It is just math. I am not I'm not a Chinese apologist or whatever people think. I'm just a math geek, and I see the writing on the wall. It's completely foolish and naive to believe that domestic products' prices will remain low when their competition is forced to raise its prices. If a corporation who manufactures overseas now has to sell its t-shirt for $70 when its competitor was selling it for $50, domestic competitor will now sell it for $60 or $65. Exactly. This is a complete lose-lose. It does seem simple, doesn't it? Begs the question, what's going on? Because at this point, it cannot be that they don't know that. It just can't. I refuse to believe that these incredibly wealthy, seemingly smart people have missed that point. So I don't know what's going on. I don't know what's going on. The intentionality of it seems almost obvious, but then what are we talking about? Are we talking about a government intentionally sabotaging their future? No, I don't want to say that. I don't want to be the guy that says, oh, Trump's doing this on purpose. I don't want to believe that. He's in charge of making the country better. I don't want to believe that they're this incompetent. I just don't. So I don't know what's going on. Maybe it's definitely not going to work, but I hope at some point in the next couple of months, at least a failed plan comes to light. It's not going to work, but at least I can see, oh, that's what they thought. Okay, well, that's stupid too, but at least that makes sense. I hope I get to that point. Right now, I'm like, that's dumb. You know it's dumb, and you must be doing this on purpose. But I will reluctantly still give them the benefit of the doubt. I love Tokyo. Yeah, me too. I've always said if you had to choose one country in the world, now obviously this is not a racist statement, I'm just stating a fact, but Japan is full of Japanese people. So I'm not saying that Americans are going to actually be comfortable going there. There's a massive culture gap, massive language gap. But imagine just for the local citizens, what's the coolest country in the world? It's got to be Japan. Right? Like, how cool is Japan for Japanese people who live in Tokyo compared to how cool is Canada for Canadians living in Toronto? I mean, it's got to be Tokyo, right? I'm not saying you should want to move to Singapore, but Singaporean people are loving their own country. And from that perspective, it starts to bring it to light. Like, I understand that Americans will never want to move to China, but imagine the Chinese experience of a person living in Shenzhen, China, as a Chinese-speaking Chinese person, looking around at their radically advancing, modernizing country, and then the same experience of somebody who lives in Hollywood, California. It's not the same. And again, I don't try to thrust Dubai on everybody, but the average person who lives here in Dubai, of course, I am very used to getting hate as a traitor to my own country, but I'll tell you that everybody who lives here absolutely loves it. It's just, you look around, everybody's positive, they're forward thinking, we can see just the unbelievable advancements they're making. We live in the most modern place. Like I said, the skylines are incredible. They'll blow your mind. I'm not saying you should want to live here, but the people that do live here, compared to the people that live over there, looking at their own experience in their own country, there's a lot of other countries that check more boxes than Canada. I can tell you that. So at some point, it's just going to slap people in the face. Oh, yeah, the world did advance. The world was moving on without us. All right. We should cap this. I have ranted until everybody's sick of me. Income taxes on the rich are futile. The uber rich don't work for their money. It's true, but you got to find a way to, like, closing capital gains loopholes, closing carry loopholes, closing wealth, estate taxes and whatnot. There are things that you can do to, like I said, slow down the curve a little bit, because you can't just let that thing compound parabolically. It just will not work. So like I said, I understand how sensitive this subject is. Tax the rich, there won't be any jobs for the rest of us. Well, let's assume I'm rich, right? I'm not. I've said I'm not, but I'm a one-man show here. I actually make decent money, so I don't want to pretend that I'm, not doing well. But I don't employ anybody. And a lot of the wealthy people that you say, oh, if you tax them, there's no jobs for the rest of us. Yeah, we don't run factories with 2,000 workers anymore. Most of these rich people, we're talking about, they got 3 employees. Like Joe Rogan has Jamie. That's it. Joe Rogan and Jamie. What jobs? What are you talking about? We don't live in that world anymore. It's not 1980. If it was 1980, taxing the rich is a bad idea because the rich are the ones that provide pretty much most of everything else. But in 2025, it is staggering how much money people are making with such a small payroll. It's some people no payroll. They're making millions. Most people, couple of employees, they're mega millionaires. You have to look at the world as it is in 2025 and finding some sensitive way to claw back money from the rich has to happen. It has to happen. You're not going to see Ford CEO retire because his taxes went up. No, that's not going to happen. It's just what you don't want to do is you don't want to stifle everyone to the point where they all just move to Dubai and Singapore and Switzerland, right? You don't want to do that, which, I mean, we're getting there. I'm telling you, just look at the migration habits of wealthy people. The people who are becoming millionaires in the US are becoming millionaires because of compound interest, not because of immigration. The people that are becoming wealthy in a lot of these other countries, like Dubai, it's happening because rich people moved from there to here. That is very different than a person who was worth 600 grand 3 years ago, and now they're worth $1 million and they're American. Now they're a new millionaire. New millionaires in Singapore, a lot of them moved there. New millionaires in Switzerland, a lot of them moved there to get the 10% taxes. A lot of new millionaires in Dubai moved here. That is a huge problem. People are leaving the UK and leaving the US as a millionaire, coming to different countries, going to Monaco. Big, big problem. So the US, of course, has a lot of brand new millionaires every year, just simply because of inflation. But look at the actual habits of these people. They're making a bunch of money. They're getting their workforce as little as possible. They're trying to be mobile. They're trying to be entirely online. And then at some point, they all kind of say the same thing. Joe Rogan might say the same thing in a few years. He'd be like, I'm a mega millionaire. I can do this job from any studio in the world. Why on earth am I living in the US paying this tax rate? Why don't I just leave, right? He can still visit. Like, I'm a Dubai resident. Officially, this is my home. But I'm only here for 6 months. I can live anywhere I want. I could live in Canada for 6 months, live in Dubai for 6 months, see all my friends, do all the Canadian stuff, and pay no taxes. It's happening. It's going to happen. So, yeah. The rich people don't employ as many people as you think they do. So don't use that as an excuse that you can't tax the rich. They're not actually the job creators people think they are. So, sorry, bike guy, hate driving cars. Motorbikes, don't die. Wear your helmet. You do have a YouTube video explaining Wheel of Fun? I don't, no, but there's a course that should come out in a few months if I ever find the time to edit the course. Videos are kind of half done, but yeah, okay, I gotta cap this. Last one. Tesla fanatics going crazy about humanoid robots while Japan has been operating manless robot restaurants for the last 15 years. That's true. Like, you go to Japan, you see some crazy stuff there. You're like, I didn't know this existed in this world. And you go to Japan, it's there. It's there already and functional. The Japanese people are like, yeah, what are you talking about? You don't have this? No, we don't. We don't have that in the West. Our countries are falling apart. Like I said, we can't fix potholes. And they have fully automated, like, half cities that are going on. Like, it's, go there, get on a plane and go there. I promise you'll come back and agree with me. I have been to Japan. You literally don't see a speck of dust there. Yeah, it's insanity. And you know what the crazy thing about Japanese culture is? There's no garbage cans either. So what they do, nobody carries stuff around with them. And if they do, they carry it all day long and they take it home and they throw it away. But even in countries like this, like countries in Japan, you will almost never see a Japanese person drinking like a Starbucks latte on the street because it's just so clean and their culture is just so respectful of everything that that's actually considered kind of rude to even have the potential for garbage outside. So, you kind of got to, in some of these countries, like my wife and I will try to be a little bit careful and try to go to the local customs, but Japan will blow your mind. People look at it and they think, oh, it's such a populated, busy place. You go to the trains in Tokyo or in the whole country, you'll be sitting on a train that is absolutely packed with people. Like you can't even imagine how many people. It's a full train. But you sit in your seat and nobody's touching you, right? So everybody will kind of sit in their little box. They'll put their bag or whatever they've got on their lap. Nobody's on their phone. It's you can hear a pin drop in some of these trains. It's just a totally bizarre place, but it's bizarre in every best possible way as well. It's a super, super cool place. I would recommend everybody goes to Japan at least once. I've been about 10 times, all the cities. I love it. Yeah. All right, let's cap it there. I've made Americans angry. I've made Trump supporters angry, but don't forget, I am super pro-American and I'm not anti-Trump, and I'm just calling it like I see it. So next live stream, we should probably talk about fading this VIX, right? We should talk about some option plays that will allow people to capitalize on this. Market flat today, so VXZ. For me personally, because remember I went to cash in the VXZ, sort of overrode my signals, I got to admit, just a little bit selfishly, I kind of do hope the VXZ is down today, just so I don't feel like a complete schmuck. I just barely missed the signal here, and then now it's fine. It's fine. Forgo a few percent there, but it's not the end of the world. All right. Thanks, everybody, for watching for 2 hours of this, random Canadian talk about all kinds of things American. I don't mean to do that, but America, Canada, can't we just be friends?